Oh, it's Adil bringing you a review of the FTSE 100 for the commencement or the conclusion of Monday's trading, the 12th of January 2015. Okay, so yesterday's video obviously called for a sell-off in the markets, and that's exactly what we got. Okay, the markets obviously hit a low or a pivot low there on my chart, 6450. So good. Okay, so far so good. Basically, based on my analysis. Okay, there was one time where the market obviously did invalidate that analysis by the yen, obviously selling off quite substantially with the USD JPY going to 119.3, and we did have some sort of floor being set on the oil price, and obviously when that gave way, and obviously when the USD JPY reversed, stock market started to sell off quite substantially. Okay, and that's based on more than likely the wage growth scenario that I referred to. Also, Google was quite weak today, and Apple obviously lost its support level as well. Okay, as you already know, my US market analysis was bearish as well. Okay, giving the obviously the headwinds in terms of fundamentals. Right. Okay, now that's over. What's happening today, and where do we stand at this juncture? Okay, fundamentals from an intermarket analysis perspective. Do forgive me if I sound shattered and tired. I've just finished a circuit training session which I've just started. Our boxing club, 2 hours of circuit training, absolutely exhausted. I can just about move my arms to type right now, let alone do some analysis on the markets. But I've promised that 2015 I'll do a video each day, just going through quickly with regards to the price action for the day, and obviously what's going to happen the day after. So as individuals, we must keep our word regardless of how much fatigue we're under. Okay, fundamentals. Okay, so Grexit phase. Okay, that was one issue that I raised. That's no longer an issue. Well, to a large extent. Why? Because there have been comments out of Europe that are backpedaling, so to speak. So there's some type of, shall we say, by the sounds of it, the way in which the comments are coming out, and as traders, that's what we have to do. We have to read between the lines of those comments. And I mean, I can read a comment out to you. What I generally tend to do as a trader, and this is for my live analysis service, I'm always looking at all the what I do is I paste all the most important news flow for the day, and one of the news flow, as you can see here, ECB's Noya says open to new Greek deal, and that QE is not only a question but if. Okay, or when, shall we say, not if but when. So that obviously sounds very bullish to me. Okay, that doesn't sound like a Grexit at all. Okay, so the ECB says open to new Greek deal. What does that tell you? It means what he's trying to do is trying to obviously educate the market by saying that there's a deal being struck in the background and they're going to prevent a Grexit. Okay, that's how you read that, how you interpret that. That's up to you. Again, it's very subjective. Okay, and each individual will have his own interpretation. But when you have the USD JPY ramping higher substantially prior to obviously Grexit, and obviously you have the market's giving you other signals, not only that, a lot of other signals that you must read from an intermarket analysis perspective, which means that traders are embracing risk. If they are embracing risk in the alternative variables such as commodities, such as risk FX, okay, etc., then that's generally a warning sign or early warning sign that we are looking for a potential short squeeze. So given the fact that they are starting to budge and starting to shift, as opposed to previously stating that okay, they must abide by the rules, the fiscal rules that have been set by the ECB, they must abide. If they were to obviously deviate from that, then there'll be a Grexit, there'll be this, there'll be that. So certainly a shift in the change in tone, or a shift or a change in tone. Okay, and that exactly is what we as traders have to read between the lines and understand. So there's the Grexit concept. Okay, and number two. Okay, so QE. Again, there's a lot of talk of QE right now, obviously with regards to 50-50 sharing with central banks, etc., etc. I mean, there's a new piece out. I think there's a tweet out by one of the leading brokers stating that buy everything under the sun. Okay, because they're expecting 4.5 trillion from the ECB in terms of QE. So any type of QE message or QE news, as you all know, creates a powerful short squeeze, and they'll continue to do that because they want to prevent the markets from selling off. So that's basically what we have to acknowledge. Okay. Just this morning, I mean, the European markets failed to sell off because there were a lot of comments regarding QE. We short squeezed last week on QE until we sold off on a Friday post wage data or post NFP data, etc. So that's basically what we have to appreciate and understand. Okay. Now, with regards to oil, oil is now coming into a potential support zone around the 46 level. So again, that's something that we must respect as well. So we're into the 45, 46 level, and we know the bottom range here is 45. Okay, and then we have horizontal support below at 42. So we are coming into support with regards to oil, and that's something that we have to respect as an individual, as a trader. Okay, so that's going to be very, very important with regards to that factor as well. So if oil price is coming into support, commodities are coming to support, okay, that's something that we certainly must respect from a trading perspective. Okay, so Brexit fears and obviously terrorism fears as well, which I addressed. Again, that's been alleviated given the fact that there was no additional news out, etc. No additional threat, no additional incident in Europe. So thankfully, the march went through peacefully. There were no repercussions, etc., etc. So that should be certainly interpreted as bullish as well. Okay. And especially given the fact that you've got a short squeeze going on with regards to potential hopium trade for QE as well, so that's something that you certainly take into consideration as well. Okay, so that's basically the incidents or the occurrences that happened today with regards to the market. I mean, I can't really think of anything else other than obviously central bank speakers obviously engaging in the marketplace that would obviously potentially shift the markets in either direction. I mean, I can quickly go through now to see if I've missed anything at all. It's really been all about QE. That's basically what the market's been talking about. So excuse me. Okay. Yep, nothing really. Okay, so nothing really. Okay, so that's basically what we are faced with. And like I said, it's all about QE. QE. Okay, that's basically what's going to be a summation with regards to that. Now we have factored in the potential negative move with regards to obviously China being down overnight. China was down quite substantially because there was anti-QE talk or anti-stimulus talk. Now the other factor as well, I mean, we had Russia that was flat, so again there's no concerns coming out from there. And the Athens stock market strangely was actually positive. So again, that's a positive sign, especially with regards to news of a potential Greek deal being worked out. That's the reason why that was positive. So there was certainly no reason why the markets would certainly be, or you would be on the bearish side with regards to the markets today, other than the fact that obviously yes, we have falling wage growth, etc. So in America, and that's basically how it's being interpreted. Obviously terrorism first, Brexit first, but again, a lot of those there's counter arguments now for those. Now, the overriding factor now, or variable at present, right, will be the Alcoo earnings. The Alcoo earnings actually beat quite. Excuse me. Okay, so the Alcoo earnings beat quite handsomely. So therefore, we have a bullish bias with regards to that, because obviously Alcoo is a barometer of the commodities market. So that's basically the fundamentals. Now, from my perspective, I'm certainly shifting into the bullish camp. Okay. Given the fact that I initially yesterday or last night I was in the bearish camp, there's a lot of factors now, reasons now for this market to go higher. Okay, so where are we then? So basically we had the bear flag scenario, which I obviously pointed out yesterday. Okay, well, obviously that's transpired now. I did make money on the short side in the FTSE, although I did lose on the long trade from FTSE at 6479. I got stopped out at 6447, which is a shame, and then the market rallied right back up to 6510, I think it was, etc. So it was a shame, but that's trading. Okay, so certainly a whipsaw. I'm actually plus 16 points at the moment, so I certainly got whipsawed in the sell-off, and I got stopped out after my initial short trade. So it's interesting. I actually got stopped out my Eurostox short as well, which is frustrating, and then I got stopped out my Eurostox long again, which was quite frustrating. But that's the market, folks. Okay, right. So daily chart from my perspective certainly looks bullish. Why? Because it's green candles in control. We put in a doji now, so the sellers certainly look exhausted. So what does that mean? That means that we're basically looking at a bull flag scenario. Okay, given the fact that Alcoo earnings is strong, and the oil price certainly seems to be in a potential support level, given the fact that Alcoo earnings have come out, that should technically put a base into the market with regards to commodities. That should certainly be a catalyst there for commodities to move higher, given the fact that it's beat, so there's potential demand there. It's not as bad as everybody makes it out to be, given the fact that we've certainly priced in the Armageddon type scenario for the demand side of the equation for crude. Okay, right. So that's the FTSE 100. Let's have a look at the FTSE 250. FTSE 250 still seems to be obviously we are still consolidating at this resistance level. So and also given the fact that it's 2 bars within the green bar, looking at a potential move higher. Okay, especially given the fact that obviously sterling still remains weak. Okay. Now the FTSE 350, you more or less the same scenario there. You're looking at a potential bull flag, given the fact that we're consolidating now for 2 days, and Alcoo is a catalyst for the markets to go higher, and obviously commodities into support. And the risk currencies are certainly looking at a potential bullish pattern as well. Okay. Now FTSE AIM, we can touch upon that. We again, there's a doji pattern, looks like an inverted head and shoulders formation to me from here, especially given the fact that it's putting a double bottom. So we are looking for a potential bullish scenario there. Okay, so that's the US, so that's the UK market now. So let's have a look at these smaller. I mean, the volatility index as well. One could look at that and look at a 60-minute chart, and you can see here the market obviously is putting a lower high now, and now potentially wants to go lower, and obviously the FTSE will then potentially go higher as well. Okay, that's something that we keep an eye out for. Obviously, we had this pivot high, and the market retraced quite substantially. So potential case here for an HNS, and obviously the volatility index goes lower, the stock FTSE 100 goes higher. Okay, 60-minute chart now with regards to the FTSE 100. Now this is an important, very important pattern here that we need to pay homage to, or pay respect to, and this is the potential left shoulder. We're putting ahead, looking for a right shoulder, then obviously down off we go, and looking at an outside bar here as well. So this red candle was an outside bar, and the market obviously negated that to a large extent, and that's something that we're going to respect and keep an eye out for again with regards to the day's or week's trading. Okay. That's basically what we find ourselves, and also, like I said, there's an inverted head and shoulders formation, so you're looking at a potential continuation for the market to move higher. Okay, that's basically what we're looking at and what we anticipate as well. So you're looking at a move potentially up to the 650 region and potentially higher as well. Okay, that's basically where we are. Now a 10-minute chart. Okay, 10-minute chart again. If you look at a 10-minute chart very closely, what do you see here? Which I explained before, we have a failed HNS formation because we did expect this pattern to play out, which I think I highlighted. If I just bring this up for you, and this is one of the reasons why I shifted my bias, because you've got a left shoulder, you've got the head which we put in the right shoulder, and obviously looking for a potential move lower, looking for a potential retest in the markets to go lower. We failed to hold that particular level, so therefore it's a negation of that pattern. Obviously we did sell off quite substantially, so that certainly needs to be respected. For now we have an inverted head and shoulders, and what's the catalyst? Alcoo earnings. So there's your left shoulder, then obviously we've sold off on this emotive sell off, we've come right back up, tested that, looking for a right shoulder, hence the reason why I'm long with my subscribers overnight. Okay, so that's basically what I'm expecting with regards to the markets from that perspective. So okay, so inverted head and shoulders, potential test of around the 6540, potentially higher. And again, like I said, the market is the judge, and allow the market to dictate. Let's not dictate to it, let it decide where it wants to go. Okay folks, so I think that's a wrap. Risk on, risk off.